Which stock is the better buy, Amazon or the Walt Disney Company? I'm going to answer that question in this video looking at 5 different metrics. So let's get right into it, starting with revenue. Looking back before 2014, Amazon has delivered much faster revenue growth compared to Disney, except for a brief moments in time. And I suspect that Amazon will deliver better revenue growth compared to Disney over the next several years, I would say, as that's just the nature of Amazon's business. It's continuing to invest in growth. It needs to scale up to eventually deliver robust profit margins, while Disney is not counting on very quick, very fast revenue growth in order to deliver profitability. And if you look at the scale, that just shows the difference. If we go back and we see, look at that separation between Amazon and the Walt Disney Company, and Amazon reaching quarterly sales of 127 billion while Disney was at 20 billion in its most recent quarter. Looking next, I wanted to look at operating income trailing 12 months up here on the top. And the Walt Disney Company, despite having much smaller revenues in the trailing 12 month, far exceeds Amazon in terms of operating income. And that's shifted since the outbreak. Of course, the Walt Disney Company was devastated from the outbreak because it relies on bringing together large groups of people to generate revenue. And of course, that's not really a kind of business that does well when there's a deadly virus in circulation, as when COVID-19 was. It's starting to recover a little bit, but still it's far from full strength, albeit it does have all of its businesses reopened and they're back into full capacity, but it's just the business is not yet recovered because international travel is not back to where it was before the outbreak. It's still about 1/3 below where it was before the outbreak. And of course, Disney relies on international travelers a great deal for its visitation to its theme parks, its cruise ships, its hotels and resorts, and all of that. So it might take another 4, 5, 6 quarters maybe for Disney to get to full strength. But when it does, you can expect its profit to exceed the 16 billion it approached in trailing 12 months before the outbreak happened. And if we look at the operating profit margin, again, Disney shows its superiority to Amazon in this regard as well, far exceeding Amazon in terms of operating profit margin. And even it only dipped below for a couple of quarters, even though it was devastated during the pandemic, it still only dipped below briefly and has recovered nicely, demonstrating the sheer profit potential, the earnings power this company possesses. And I always say that you got to look at a company's earnings power. Revenue growth and revenue is not as important as profits and earnings. You can always grow revenue if you're willing to sacrifice profits and profit margins, right? You can take a product that costs you $10 to make and sell it for $2, and you can experience incredible revenue growth because customers are going to be lining up to buy your product that you're willing to sell at a loss. It's much more difficult to sell your product at a reasonable profit and still demonstrate growth in the long run. That's what Disney has been that's what Disney has proven for decades, and this is what Amazon is trying to achieve. Only recently has it achieved consistent profitability, only in the last decade, and it's really trying to expand these margins to show that it can deliver these kinds of profits longer term. Next, let's look at their cash balances. And Amazon's got 35 billion in cash while Disney's got 11 billion in cash. This has been coming down. I like to look at cash here for Amazon and Disney. They're important for 2 different reasons. For Amazon, it's important because the company's experiencing significant decreases in terms of cash flow from operations as sales growth has slowed in recent quarters. For Disney, it's important because the company's investing in rolling out its streaming segment, and it took on a lot of debt during the pandemic and before the pandemic to acquire the Fox Corporation, and so now cash is going to be important for Disney also. So both of these companies, it's important that they have sufficient cash on hand, but for different reasons. Next, looking at cash flow from operations, and this is what I highlighted earlier, Amazon's cash flow from operations in the trailing 12 months coming down considerably, but still nice at 39.66 billion. The Walt Disney Company also cash flow from operations not increasing as robustly as it's investing in rolling out its streaming segment, which has yet to achieve profitability. However, that is expected to turn around in fiscal 2024, which is its next fiscal year. Finally, let's look at valuation between these two stocks, Amazon and the Walt Disney Company. I chose to use the forward PE ratio, and looking at this metric, Amazon is more than twice as expensive as Disney, trading at a forward PE of 62.95 compared to 26.22. And in my opinion, Amazon does not deserve this premium valuation at this moment. So if I had to say which one is the better stock to buy, I would say Disney is the better stock to buy right now. All right, that's all I've got for this video. Thanks for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.